This is Market Fatafat and you're watching ET Now, but we'll take a detour from stock related chat to a very important development which is happening in the Mumbai realty space, and that is DB Realty has done a very successful QIP fundraise. We are joined by Shahid Balwa, Vice Chairman and MD of DB Realty. Mr. Balwa, afternoon. Thank you so much for your time. Congratulations on your fundraise. I want to talk to you about who were the key participants. You could share a color on how much finally did you raise. I believe that you had nod for about 2,000 crore fundraise.
So, though we had approval for raising up to 2,000 crores, we have restricted our QIP to 920 crores. We have some marquee investors, global funds, and some domestic funds. So, looking at the overall picture, as the fundraise was planned for growth, and it didn't have any particular reason in terms of debt repayment or no trigger of that sort. So we thought that in the current market, this was the correct amount that we should raise, and we were able to raise. Though we had the opportunity to increase the raise, we had demand more than what we raised, but we are happy with what we have raised in the current market conditions.
And probably it's a smart choice to rationalize the fundraise. Might as well, would you consider the remaining part at a later date when the requirement arises?
So, to be honest, I don't think that we have any plans to raise further equity in the foreseeable future. The reason being is that from the coming year onwards, our free cash flow position is expected to be much better than in the previous years. And I lay emphasis on the fact that we will, much better, because we already have a pipeline, a visible pipeline, where we have almost 250 crores of rent coming from rent of one of our assets. We have close to about 750 odd crore rupees free cash flow coming from completion of some of our projects. And the hospitality vertical, till it is demerged, will also be generating about 200 crores of cash flow. So we don't need any cash going forward. What we will do is to judiciously deploy this capital that we have raised. So there's a difference between us and our peers, because we are actually a land company versus a full service real estate company. Our real estate cycle is about 1.5 to 2 years, vis-a-vis 5 to 7 years for any other real estate company. We buy the land, or we get into a land redevelopment, and we identify a developer during the course of that, and within a year and a half or 2 years, we have a developer who's already taking the baton forward from us, and whatever capital that we have invested in that project is returned in the form of a deposit or revenue share by that developer, the incoming developer. So we have partnerships of similar nature with marquee names such as Prestige, Godrej, upcoming partnerships with L&T, and many. We have an existing partnership with Adani Realty. So many such existing partnerships will be leveraged to increase that portfolio, and new partnerships with people who are not present in the Mumbai real estate space are coming up in the foreseeable future. In addition to that, we will have a yielding portfolio of almost 1,500 crores, which is in the form of office in Mumbai, which will start yielding about 1,500 crores a year in 3 years from now. So, and then with the demerger of the hotel company, we will really not need any capital going forward.
That's a very important clarification you made, that this 920 perhaps would be the last fundraise for the foreseeable future, because cash flow position will start yielding results in a major manner. I want to scratch that point of cash flows a little more. We are just on the last quarter of this financial 25, 26, 27. If you can talk to us ballpark, consolidated, all the businesses coming together, what kind of cash flow situation would you be on an annual basis?
So I'll talk about the real estate bucket and then the hospitality bucket separately. 25, we are hoping for 1,000+ crore of cash flow. 26, that cash flow should go up to about 1,800 crores. And from 27 onwards, we are hoping that that cash flow will touch about 3,000 crores. So we already have a plan for achieving this cash flow, and it's already set into motion. This 920 crores will be a catalyst to achieving that plan. Now, on the real estate side, on the hospitality side, I'm sorry, we are today 500 operating hotel rooms approximately, and we will have our next hotel, which is the St. Regis Marriott Marquis in partnership with Prestige, which will start operations next year. On a stable state, our share of EBITDA from that project is going to be about 275 crores. So the hospitality venture in 26-25 should generate close to 500 crores of cash flow. And in the year 26, we don't have any opening, but 27 we will open a hotel in Mumbai, which is a 800-room hotel at Sahar, and that will add about 400 crores to this 500 crores of cash flow. And in 28, 29, we'll open 2 hotels, both hotels in Mumbai. So our hotel cash flow will touch about, by 29, about 1,500 crores, our share of cash flow in these projects. So the real estate will be about 3,000 by 27, 28, and hotel will be about 1,500 by 29, 30. And all these projects are tied up. They are the land is already available with the company. So in the demerger, whenever that happens, hopefully during this calendar year, the hospitality company will be on its own, and it will raise its capital. The hospitality company might have to raise some capital going forward, but we are hopeful that it will be able to raise, and it has got some marquee assets. On the real estate side, we don't expect to raise any capital going forward.
That's a brilliant explanation, Mr. Balwa. Thank you so much for this. You've given a 3-year roadmap, in fact, for the cash flow visibility on both the end of the business. Just before we wrap up, I want to understand, you've given a guidance of 3,500 rooms in total as far as your hospitality arm is concerned. Can you clarify, you will not require any capital raising for that 3,500 rooms?
There are 3 aspects of that, to that question. One is that we are hoping that the hotel company will get demerged and listed by the end of this calendar year. So the realty part will actually support that business till it happens. We have 300 crore rupees of support provision provided for the hospitality company in this fiscal. To say in the coming fiscal. But even that money is going as a loan from the realty company to the hospitality company. So when it demerges, the hospitality company will carry that loan given by the realty company in its balance sheet. With regards to raising further capital, in the demerged portfolio, there are 2 assets that are going to the in addition to the 2 operating assets and 1 upcoming assets, 2 more assets are going. Both will go to the realty company without any cost and no debt. However, there is a residential component in one of the projects which will kind of provide some cash flow to the hospitality project at Bandra West to the demerged hospitality company. So to that extent, no capital will be required. But yes, there will be a capital raise at an appropriate time in the hospitality company, but we are not looking at supporting that from the real estate business.
Excellent. Thank you so much for your time, Mr. Balwa, and good luck on those execution.
If you like this video, then like, share and subscribe to ET Now.